First, of course, they're talking, pundits talking about lesser wages, and of course, crude oil got hit on Friday again, and of course, the terrorist fears out in Paris. So investors got a little shaky and decided to sell when really they were buying in the pre-market. And you can see this 5-minute chart, very, very, very nasty reversal here, and then we kind of base pretty much most of the day. So where are we going from here now? This is going to be interesting. It's a little shaky. We're going to need Monday to kind of play itself out a little bit before we start making any calls or at least really get involved with trading. I want to run through some of the indicators, and that kind of always helps me get an idea, or at least get a good handle on what to expect coming in the new trading week. I want to show you copper. I mentioned copper before, but you could see copper being Dr. Copper, labeled as Dr. Copper, because it is an industrial, worldwide industrial metal. So when copper starts to slow down of countries purchasing copper, to me, there's a slowdown. And this you can't ignore. We're down here at the lows. Do we look to get a bounce? Possibly. Everything else, everything goes to revision to the mean. So when you get that bounce, to alleviate any downside pressure, you got to get above the 50-day moving average. And that's way away right now. But this is not a good sign here, guys. This is something that is troublesome for this bull market that's been extended now for the last, I believe, 8 years. Take a look at the bullish percent. And this is a very reliable indicator. It's based off a point and figure. And you can see every time we cross at or below, we usually get a little chop, but every once in a while catch a very, very good trend, just like we did here in the October lows. And now we've been kind of chopping around, but we are on a sell signal here. And that's what I want to point out. We are on a full-fledged sell signal, and it's going to take a little time before we get back above here, before this market crosses back over again. So this on a sell signal, not a good sign. Now we have the NYUD, which is the advanced decline with volume, which I love to see. We are still not at washout levels where we can get a bounce like we did here in October. And you can see here October, we had a little bit we had a little push in December, again in February and October of last year. So this can continue to move lower, and that means that we can continue to see some selling pressure from that reversal we had on Friday. Now, remember, we are really pretty much on just under the zero line here. So anywhere from this plus 50, minus 50 to me is neutral territory. So we can bounce, okay? And if we do bounce on Monday, we need to monitor how the bounce is shaping up. Is there a lot of volume to the upside? Is it a weak bounce where stocks aren't really moving, just the indices are just kind of meandering around, grinding higher? That's not a good sign. That's something that you want to be very cautious and privy to what's going on here, okay? Now let's take a look at the McClellan Oscillator. And also this is in neutral territory, telling me that this move can happen to the upside and or to the downside. That's why I'm a little bit confused, or the charts are saying it doesn't know which way it wants to go. Now we had 2 days up, mind you, Wednesday and Thursday, 2 big up days, and then we started to roll again. So we're still in neutral territory here. So it means that the markets can pick each way, any way it wants to move, and still not be overbought and or oversold. So this is why I'm showing you that we're in neutral territory as well, like we did like we were with the NYUD. So remember, guys, this is a little tough, right? Let's take a look at the NDX 50, stocks above the 50-day moving average on the Nasdaq. Now, obviously, this index is holding up quite well, and this has plenty of room to run to the downside, and it is in an area where usually the markets sell off. Okay, we're not down here where we are over extreme, so we can get there relatively quick. And remember, we want to see these washouts. This is where you get the bounce. We're not even close to being there, so plenty of room to run to the downside. Okay, stocks above the 50-day moving average in the SPX, same thing. You can see there's plenty of room to run to the downside here, and there's enough room to run to the upside before we get extremely overbought in the S&P. So again, a mixed picture yet again. And that's why I want to bring this to you, saying it's going to be a difficult call for Monday. So we want to let Monday kind of play out, see what happened in the overnight session, and then try to get some sort of a direction. Okay? Here's the WTI. This is one of the culprits. And as you can see, here's a daily chart. We are in this thin zone. We broke down below it. This could easily, guys, flush to $38. Easily flush to $38. This is heavily shorted. sold into by producers who are the smart money, and who knows who else is manipulating oil. Okay, remember, keep in mind when these highly leveraged oil producers and drillers, when they're leveraged by loans, they're going to want banks are going to want them to hedge. If they don't hedge, they're going to call their loan in, and that's where you continue to get push lower because of the fact that these producers and some of these high leverage producers are selling to hedge so they don't get their loan called in. And to be honest with you, this is pretty nasty. We had, I look at rig counts and leases, and we had another 68 rig counts closed alone this week. There are 68. That's tremendous. And remember, there's 90 to 125 personnel that work on these rigs. So that's a big number just alone. Now, the non-farm payroll numbers that came out really never reflected in that because it's still a little early. But if we continue to get some of these big drop-offs and these rig closings, it will eventually affect the markets as well. And even though you say it's a stimulus, oh, that's great. And then there's no denying it. You know, filling up my car from $80, $100 with premium to now $55, $60. That's a big savings once a week. So anyway, just wanted to give you guys a heads up on the daily. Take a look at the weekly. Just gets a little closer. This could easily flush. You see this thin zone here. We can get down to 40. And really, to be honest with you, I think 40, if you get an overshoot, 39.5, 39. And if it just continues to go down like this is something that really I'm interested in looking to buy is crude oil right here, right around $40, $42. But I'd love to see this hold here and then at least get a dead cat bounce. I mean, you could see the weekly 9-week moving, the 8-week moving average at $59, over $10 away. So anyway, just wanted to bring that up to you guys. Let's take a look at the indices now. Every one of the indices have made a lower high so far. Here's the spiders. As you can see, it unwounded a lot of the overbought reading, which is very good. However, we also have movement. Now we had 2 days up, and we have a big distribution day down. Remember, it did stay within an inside day of the previous day, so that's a good sign, and it did hold the 50-day moving average. If we break that, the next step is going to be that 200-day here on the spiders. And you might want to just kind of take these levels down and write them down. Let's take a look at the diamonds. Diamonds, not as bad. Again, inside day, it's above its 20, but next step would be the 50 to fill that gap area, and then, of course, down below here, and then, of course, that 200. So not as bad as the SPY, but still a higher low, a lower low from this previous low. So we need to really recoup that day from Friday. Okay, take a look at the Qs. You can see again, lower low from this previous low, lower low, lower low. So again, watch the Nasdaq. Nasdaq's been the best of 2014 right now, the strongest. It still is, but if we get to lose this and we lose this 50, we're going to get to this area here, and then eventually this thin zone on these volume zones here will suck price down to this 200-day moving average. Okay, so last one is going to be the transports. And transports, you want to show you we're at that 38.2%. And again, lower high from the previous high, lower high from this previous high. We're going to test this area here. If we do break this area, which we closed below the 50, look for a test of the 61.8. Anywhere in this little area of supply and demand here, we had this congestion. So this is going to be the next target if we lose that 200. Okay, so guys, it's going to be an iffy shot for the start of next week. I do see some selling pressure continuing. I just don't know if it's going to follow through right away for Monday or Tuesday. Maybe we get one up day on Monday. Everybody gets back on the bandwagon. Bull market's full effect. Pundits come in, start to scream Dow 18,000, and then they sell them, and they sell them really hard. So just be careful. Volatility is picking up every day, as you see in the average true ranges. So just keep that in mind. Watch those levels that I just told you, and have a great day trading. We'll speak to you tomorrow. Take care.